Justin, what changed? What did the quarter tell you that made you say, yeah, can't do a buy anymore here?
Yeah, thanks. Really, the thesis is broken on this one. So the bull case on Snap was that this is a budget, a share gain story. It would attract more budgets from advertisers due to the measurement of ads being very effective. And what's really happened here is that Snap has had difficulties around these platform changes. It's frankly been a beta play on just ad budgets increasing, as we've seen ad budgets really start to go flattish and even contract in some sectors. Snap is now losing share to more effective channels, whether that's Meta, Google on one side, and TikTok and Apple on the other. So when we look at the growth profile going forward, this is probably a 20% grower at best. Free cash flow, gap profitability pushed out far into the future, that it's difficult to justify staying with this one.
So given all of the factors that Evan Spiegel blamed, that Julia just outlined, macroeconomic, privacy changes for Apple that had cut into the way that they're able to collect advertisers, the competition, the shrinking pie among advertising dollars that they're experiencing right now, what is it that Snap can actually do to turn this business around, given those factors that, at least from the face of it, seem largely out of their control?
Yeah, it's a great question. And if you look at just ad agency results the other day, those were actually fairly reasonable. Snap is now growing below ad agencies, which you don't really expect to see for a secular growth business like this one was supposed to be. So it really has to be a function of both R&D and sales and marketing investment, which paints the picture of the challenge Snap faces. It has to reduce OpEx a bit to deal with the slower revenue growth, but it can't cut too deep because then it sacrifices potential market share gains in the future. So really, the company's in a rock and a hard place from our perspective here.
Justin, I'm just looking at your 3-year rating and price target history. I mean, you've had this as an overweight as low as, I think, $29, as high as $88 or $90. You finally downgraded it today. You know, explain that sort of. Why not just stick with it, given you've been high and low on this thing and had the same rating for a long time?
It's a fair question, and I'm certainly not alone with that this morning. Really, the thought here was that Snap had done a good job on the measurement side, was dealing with competition effectively, and results last night changed that. You're seeing that Snap now specifically call out competition when agencies are actually devoting more budget to the TikTok at the same time. That the question that I think is in a lot of our minds right now is, if Snap is growing basically zero into the July period right now, how much worse could it get if and when macro factors intensify? Recall this one back at the onset of COVID was actually still growing in the teens in that April timeframe. This is a worse result than when the world crawled to a halt back in April 2020. So there's a lot of questions on what this looks like going forward, and it's difficult to justify staying with this. I'd have to argue for multiple expansion, and that's something I don't have confidence in, given the results and given the uncertainties.
Shepard Smith here. Thanks for watching CNBC on YouTube.